Hey guys, we are back. Thank you for waiting. So we now have Matt who's a founder of AdQuick, who will be talking to us about how to solve the infamous chicken and egg problem. I'll let you take it away, Matt, and looking forward to all of your questions, everyone.
Okay. Great. Yeah, excited to kind of talk about the supply side, without which you can't really have a marketplace. So yeah, I'll just jump in. I'm pulling a lot from two main experiences, both the company I'm currently the CEO and co-founder of, AdQuick, which is basically like Expedia for real world advertising. And prior to AdQuick, I had a cup of coffee up at Amazon, and more relevant to this discussion, I was an early-ish employee at Instacart. When I joined, it was about 15 people, and we were in a couple cities. And I did a variety of things for a couple years there, and learned a lot about how to get large, sort of unwilling suppliers to eventually come around. So I'll jump in and yeah, hopefully leave plenty of time at the end for Q&A. So initially, it doesn't seem like anything is in common between groceries and billboards, but now having been deep in those two industries, there really are. So these may not all be relevant to your respective companies, but what we've found that are analogous between the two are that there's thousands of suppliers. There's sort of a large head of a few main suppliers and a fat tail that represent a very significant amount of overall supply, which I think is a very good thing. These are both decades or without a home. The average large company is over 100 years old, so they have no software DNA. So that's where good B2B marketplaces generally come in, and they really struggle with their own customer experience. And so again, that's where B2B marketplaces come in. So 5 of the themes that have run through both of my experiences so far that I thought I'd spend a little time talking about were the fact that particularly earlier in the life cycle, your company's just simply not a priority to these suppliers. Going to talk about a few things that you can do to kind of hack the de-risking, which is a major component of supplier adoption. The fact that integrating, joining, working with your marketplace is a risk in their eyes. Ways you can find holes in the supplier customer experience or their capability set, reverse compatibility, and finally, single player mode. So the first one is that generally, I think it's helpful to embrace the fact that you're not a priority. So at its face, that sounds like a negative, but I think the positive aspect of that is that it gives your company a lot of flexibility. You're a little bit under the radar, and you have the leash to do a lot of things that their company may not be able to do because of corporate concerns and slow decision making or capabilities. One of the things that a lot of people don't know about Instacart now that it's become what it has is that we had no formal supplier grocery stores, in that case, partnerships or relationships until after our $40+ million Series B. So initially, we manually cataloged the grocery stores. So at the very earliest, the founders kind of now infamously basically spent 22 grand at a Trader Joe's, bought every single item in the store, took it back to their apartment and sat there logging every item, price, etc. And then I think they sort of abused the return policy because at that stage they weren't the well-funded company they are now. They then evolved and we evolved. One of the first things I did, I was a MBA, and I show up to Instacart. I'm super excited about what I'm going to be doing, and I spent part of my first week removing the buzzer from manual Bluetooth scanners so that we could go into the physical grocery store and actually scan the items. So there's 20,000 items in every grocery store. Grocery stores vary selection by market. And so one of the kind of guerrilla things that we did early on was send sort of incognito people, myself and our team, and then eventually contractors, to scan item by item without alarming the store management or the grocery chains. What we did early on at AdQuick before, again, because we're not a priority, we weren't able to get, here's all of our inventory, here's all of our pricing. We would request that they were sent via email, and we manually entered those into the platform. Both of these tactics were, because we weren't a priority, we weren't able to get full inventory, but we were able to get sort of a workaround or a hacky way to give our customers the best experience that they wanted, which was access to that inventory. So a lot of times there are ways to create the kind of the mirage for your buying side that you have actual supply side integrations. Another thing to keep in mind is that you're a risky proposition for most of these companies. Now, if you're working with SMBs, that may not be the case, but in both Instacart and AdQuick case, we were targeting publicly traded companies that we wanted to work with. For Instacart's the Kroger, Aholds, Whole Foods of the world, and then with AdQuick, the Clear Channels, Lamar, Outfront of the world. So one of the things you can, and I highly recommend you do, is try to de-risk it. You have to imagine a board meeting at Whole Foods saying, hey, there's this startup Instacart that is 2 years old and has a few million in funding. Let's bet on them. That's really not going to happen. So what we did, both from the first thing I mentioned, which was creating a way for us to have access to their inventory without their formal opt-in, to actually launching the product and delivering from those stores, getting customer feedback, showing how incredible the ratings were, proving that the delivery times were accurate and on time, and then also providing and showing that Instacart could be valuable to Whole Foods, who was our first kind of landmark partner. And it's evolved. There's some story there, but anyway, we were able to go to them and say, hey, look, we know where your customers live, what they're buying, their repeat purchase frequency, etc. Then for AdQuick, as we aggregated all this inventory really manually, we were able to go back to the large players and really all the suppliers and say, look, we've stored all this data. It's already in here. All you have to do to get the rest of your inventory on the platform is either give us an API, send us a file. And the fact that we had already aggregated all of this inventory was like, in their mind, hey, it's already on there. They're now driving us business. It's a much easier decision for them to make once you've already kind of de-risked some of these aspects. Another, this feels a little bit obvious, but kind of worth saying, is that suppliers have lots of weaknesses they can't solve. In the initial slide, one of the things is that these companies tend not to have any software DNA. They've probably tried to build things in-house that took way too long, were way too expensive, and by the time they shipped were irrelevant or buggy, etc. So some of those things that you can focus on as a company is, what can't your suppliers do, or what are they struggling to do? So with Instacart, some of those things were scaling and hiring and staffing of independent contractors, our shopper pool, who basically facilitate the delivery windows, building a shopper app internally that allowed anybody to do this, and then our logistics algorithm that batched the right orders to the right shopper to get to the right customer in time. With AdQuick, that's a lot of workflow automation for the outdoor advertising industry just to execute a simple billboard campaign. There's 12 steps, and without AdQuick, it's done very, very manually, all through email, error prone, slow, costly. etc. And then the other thing that we do with AdQuick is have ROI and attribution front and center, so that when brands buy outdoor advertising, we eliminate the friction of just the planning, buying, and execution process. But as importantly, or maybe more importantly, is we give them analytics and attribution on what was happening based on the outdoor advertising campaign, so that they are able to continue to spend and scale up their spend within the channel. The specific suppliers in the outdoor advertising industry cannot do this, both from a technical perspective, but also a fundamental industry perspective, because with outdoor advertising, unlike grocery, it's a multi-supplier transaction, meaning most significant buys are done across media owner, many suppliers. So to measure the channel holistically, a specific supplier is unable to do that. An extension of that is understanding your supplier's priorities. And this is basically your supply side adoption roadmap. So having conversations with all of the supply side stakeholders is very important. What we learned at Instacart is that basket size was a massive, and that's just dollars spent per checkout, is a massive priority for grocery stores. This is why they have all those kind of impulse buys at the checkout. And in retrospect, it sounds silly, but a lot of the things we would hear early on is like, well, what about all the serendipitous purchases that customers do when they get into the store? They'll never do that online. And with smart algorithms suggesting complementary items and the ability to add 5 cases of water instead of 1 that you would have to carry yourself, we were able to prioritize that and show with hard data that basket sizes on Instacart were larger than in store. Another piece that we found is that grocers wanted to be able to easily update their pricing. And what happens in the store is that once an item's on the shelf, you need to send somebody manually to update every item that you want to change the price on. With Instacart, that's basically a click of the button and every item can be updated for price. For AdQuick on the supplier side, what we saw is that inventory owners were running their companies on Excel. So they'd have thousands of lines in Excel, each representing a single location. So to create a simple proposal, they would need to cut and paste, find the units in Excel, put it into a separate sheet, attach that to an email that's immediately stale. So we were able to build dynamic proposal software that took that time down by about 10x. And then, of course, this is probably ubiquitous for any supplier in the history of suppliers, is that they want access to new customers. In our space now, the out-of-home industry, they have trouble accessing new customers, and AdQuick is sort of a unified front for bringing on new marketers and advertisers to the space. And one quick thing here is that smaller, low-stakes suppliers are amazing for this early on. You can get firsthand feedback. They can drive your product roadmap firsthand. Then you can scale up and take the smaller scale examples and use that to work your way up the food chain on the supplier side. Another really valuable mentality and approach for supply side acquisition is always considering reverse compatibility. The reason that that's important is that that is going to allow you to work with any existing solutions that suppliers have, so that every incremental supplier does not need to adopt your system. They need to just give approval and you can adapt to their system. One of the reasons that Instacart beat Google Express straightforward is that Google approached the grocery industry with a very rigid set of requirements for how a retailer, a grocer, would want and need to work with them. At Instacart, anytime we had a new grocery partnership, we had a team, a catalog team that was engineering, product, et cetera, that would customize the integration for whatever system they were using. So a kind of trite theme here is customer obsession. And just to remind yourselves that your suppliers are your customers as well. Even though they may not be driving the transaction, they should be treated like customers as well. And again, that's kind of one of the main drivers as to why Instacart was able to beat Google. With AdQuick, a similar story in that the media owners, of which there are 1,100 or so in the US, many of them are working with Excel, some kind of 25-year-old ad management software, and we're able to work with all of those. And without the Instacart experience, we may have taken a harder line on that and would have been worse off for it. So definitely considering reverse compatibility throughout your supply acquisition mentality, I think, is really important. Single player mode is another kind of well-known component of supply acquisition. We at AdQuick have now taken the playbook that OpenTable really created. At Instacart, it was a little less relevant. The biggest benefit for retailers and the suppliers in that situation was being able to light up a delivery service and drive incremental revenue through that. Frankly, we didn't have much of a a single player mode for our suppliers on that side. What we've built at AdQuick has significant single player benefits. So the media owners can add basically like e-commerce for their websites. So sort of a Shopify component where from day one, regardless of any incremental inventory that we drive, their internal teams are more efficient. Their customers get a better experience with the proposals and checkout and execution software. So what that's really allowed us to do is scale nationally and very quickly. Because otherwise, if suppliers were fully expecting significant amount of revenue immediately, it would be a lot harder for us to drive that nationally. So what this has done is allowed us to acquire media owners throughout the country, whether or not we have a lot of demand in that particular market. And that's been a really big benefit. And it allows and gives your company the flexibility to grow supply and demand a bit more independently. One of the things that was tough about Instacart is that if we launched a market or launched with a retailer and demand was lower than expected, it was a really bad experience for the retailer, and they would be kind of miffed that they didn't get the expected revenue benefits. So single player mode is a really beneficial thing to think about. So that's the quick presentation. So I can open it up for Q&A or dive deeper. I kind of glossed over a lot of these. There's a bunch of different little tactics within each of these, but I guess I'll open it up.
Super. Guys, feel free to comment in the chat section if you have any questions. I think we have a bit of a lag, so I will kick off with a question first. What did you find most challenging when you were building AdQuick? Was it generating the supply side of the marketplace, or was it the demand side of the marketplace?
In AdQuick's case, it has been the demand side. One of the things that we are, I think something endemic to the outdoor advertising industry is that they're used to working with third parties. Historically, that's been advertising agencies. So outdoor media company will often be sending their inventory to a third party who then puts it in front of the ultimate buyer, which is the brand or the advertiser. So that's actually been a much less steep hill to climb than it was with Instacart, where for a grocery retailer to allow a third party between them and their customers was unheard of. Whole Foods treasures their customer experience, and in fact, Trader Joe's still isn't on Instacart because they have the belief that their in-store experience is such a vital component of their company that they still don't want that. So with AdQuick, it's definitely been more demand constrained, and with Instacart, it was supply constrained. And as I mentioned, it took us multiple years and a bunch of funding. And for the VCs on the call, I would say that one of the things that I don't think a lot of people externally really appreciate, or I have a new appreciation via the Instacart experience, is that the capital that we raised at Instacart was actually incredibly vital to making Instacart a known commodity that retailers could bet on, invest on, integrate with, because having raised all that money, they knew we'd be around for a really long time. And that's a dilemma that early stage startups have, is that you're new, you only have a couple million raised, startups fail all the time. So to have a large supplier of any kind really bet on that company is much more difficult without a lot of that capital. So there's sort of qualitative benefits to that capital as well.
Thanks for your answer, Matt. Just a quick point, you're still on screen sharing, so we can see you and your...
I will stop that. Thank you.
The next question is from Pavel, actually one of my colleagues, who's asking, on the single player mode, did you find suppliers for AdQuick that were only interested in the software and the efficiency of single player mode and not in the demand eventually? And how did you deal with such opportunities?
Yeah, absolutely. So our AdQuick's customer base for now is predominantly in major metro areas. We're working with a lot of D2C companies who over-index in the major markets. Now there's outdoor media throughout the country, and we have people, media owners in rural Texas. So they were interested initially in the single player mode. Of course, I don't think you could find a supplier and in the media owner business. Of course, if we were driving them more revenue, that would be a very welcome development. But the single player mode has allowed us to onboard and make very happy suppliers throughout the country who may not be seeing revenue from us just yet.
Great, makes a lot of sense. And the next question is from Slimane. I hope I'm pronouncing your name properly. The question is, how has your business model iteration been affecting bringing the buy and sell sides onto the platform?
Yeah, so we have a transaction model of a fee for both buyer and seller. I think the benefit to that structure for suppliers, the only time there's any transaction fee assessed is when they're getting new revenue. It's incredibly unlikely that many of them would have seen any of this revenue anyway, so it feels very incremental to the vast majority of those suppliers. And then for the buyers, we have a 4% fee, which as compared to an agency is anywhere from a third to a quarter of what they've been paying, with significantly more value around the optimization, inventory they have access to, and analytics. So we've tried to be quite low. And then I think it's helpful to find proxies for any stakeholder really, but for suppliers in our industry, they'll use brokers. It's kind of an alternative for incremental revenue, and those companies take roughly 30%. So our net 8 to 10% from the suppliers is significantly less than that.
Great. And next question is from Robin. And I think this is really around the credibility of early stage marketplaces. So are there any ways for early stage marketplaces to show to their customers that they'll be around for a long time, aside from the amount of capital raised? So how do you think about signaling, for instance?
Yeah, that's an awesome question. One of the ways that we've seen the benefit at AdQuick is we have a pretty well-known investor, Alexis Ohanian, co-founder of Reddit, They're an early stage investor, and he's a high profile individual who's been very vocal for us. And honestly, we noticed a change in the tenor of the conversations with particularly the large media owners. So I think that's one that's hard to replicate. So I feel like that's kind of shitty advice. It's a good question though. Anything else you can do? I'll think about that. I don't know if there's a way to get in touch, but I'll think about other ways, because if you can do that, that's a huge benefit.
Yeah. And another question is, have you seen any of the supply side that's bringing their existing customers and their existing demand onto your platform to make that process easier?
Yes. So
how do you charge these types of customers that actually bring on their demand with them?
Yeah, so the way we've brought it on is sort of within our single player mode. So for a media owner, they do their business, particularly the smaller ones, directly. So if it's a local media owner, they'll be advertising with, or a local university might advertise with them directly. So our single player mode facilitates that transaction. We haven't monetized that yet, but there's ample opportunity to do that when we feel like the time is right and the value that we're driving overall is significant enough. And one of the things we're actively working on is figuring out how to do that to our broader marketplace, where a supplier will have that customer and, for instance, in North Carolina, be booking out their advertising there, but that advertiser might be booking in 5 markets. How can we get the other 4 markets? I think that's a massive opportunity. I know a company, just anecdotally, that's done that incredibly well is Faire, F-A-I-R-E. So if you can do that and use suppliers as a distribution channel, that's incredible. That was a big benefit that we saw at Instacart, where when Whole Foods is promoting the hell out of Instacart, people shop at multiple grocery stores. And so instead of making the Costco run, which is very cumbersome, the Whole Foods customer, when they get home, will see that Costco is also on Instacart. So there was a lot of cross-pollination from our suppliers in that instance. It is a bit of a touchy, it can be touchy. It was a third rail for us, where a lot of the grocery stores were concerned about losing customers and share to other retailers. So it's something to be careful of, but if you can figure it out, that's a massive distribution channel.
Great. And then final question for today is from Vishal. So how do you mitigate risks arising out of service supply quality of vendors on the marketplace, since the marketplace essentially implies accountability and they should in theory ensure good service to customers?
Yeah, that is a very good question. The 2 examples that jump to mind is Instacart. Every grocery store has crummy avocados, spoiled fruit, etc. So Instacart bore the brunt of that. We did that with a world-class customer service team, aggressive refunds. It's historically not been a profitable company, so we had the flexibility to do that. Here at AdQuick, we've tried to build software solutions. So one of the things that we see is an outdoor campaign will start, and the advertiser won't have proof of that for sometimes multiple weeks. So we've built a drone-based capability where we can dispatch a drone ourselves on behalf of the media owner to get that proof of posting immediately. I think that's one of the unique opportunities that B2B companies have, is how can you be better at that end product than the actual supplier. So with the grocery instance, if you buy a cracked egg and get home, who's going to go back to this? Not a lot of people are going to go back to the store and ask for a refund, because that's a huge hassle. With Instacart, we could refund that item and give a next delivery credit immediately, remotely, with software. So I think that's a good concern to have, and a big opportunity for marketplaces to have that better ultimate customer experience.
Awesome. Well, thank you so much, Matt, for joining us. That was a really exciting talk, and so glad that you could join us this evening. There's still a lot of questions going on, so if you have some more time after the event, feel free to jump into the chat section and answer them or connect with people. And yeah,
Sounds good.
we're going to go offline. So thanks a lot.
Thanks for having me.
Take a quick 5-minute break. And next up will be Melissa from Blantum, who's going to be talking about how to reduce your CAC, eliminate disintermediation, and more on Blantum. So thanks so much, and we'll be back in a little bit.